Good morning, everybody. This is Patrick MontesDeOca with the live trading room for the Equity Management Academy. On this report, on this segment, we're going to review what the VC price momentum indicator told us what to expect this past week. So if you put on our website, the Equity Management Academy, EMA, the number 2trade.com, EMA2trade.com, you're going to get our website. And if you go to the home page, in the home page you can see the video that we posted for last week's report featuring Jnug explosive potential, which we will get into a little more detail as we move towards the end of the program. But if you click on updates and you click on the gold and silver weekly futures swing trading instructions for November 21st, this is the report that we just posted a few minutes ago, which is the algorithms that tells us what we can expect next week. If you click on my name, Patrick MontesDeOca, it will take you to all the reports that I published today, as well as all the previous reports that I have published over the last few weeks, months, and even years for that matter. So if you go to the report, if you scroll down to the report that we published on the 14th of November, which was last weekend, what I want to do is take a look and see what happened this past week based on the signals that were given last Saturday. And last week, the market, the December gold contract closed at 1186. It was a bit bearish based on the fact that it was trading below the moving average of 1206 on a weekly basis, and the weekly pivot point or metrics that we use is the 1175 for the week. And it told us that if basically it comes down below there, that we can come down to 1157 to 1128, recommending basically to buy at those levels. So let's just take a peek and see what the algorithm produced for last week, if we take a look at the gold market for a minute. The week of the 14th, the market closed about 1186, so it was a very bullish close, and it closed above the 1175 metrics or pivot point for the week. So it was indicating that we had a bullish pattern developing based on the momentum indicator that we should take profits at about 1204 to 1222 if the market got up there this past week. And coming in on the 18th, the market made a high of 1204.10. And basically it activated some profits for us at these levels, since it basically approached the first level recommended to take profits on Saturday. Then the market made a new low on the 20th, which was on Thursday, of 1176. Never really coming down to the low end of the price indicator of 1157, but came right into the major area of support of 1175. And the correction coming down to 1175 or 1176.20 on the low on Thursday, rejecting those lows, confirmed that the uptrend was still intact and the market rallied on Friday to a high of 1207, once again into the area that we were expecting the previous week to take some profits. Now, let's take a look at this week's report and see basically what we can expect for the following week. I'm going to add the algorithms for next week, and we're going to examine basically the pattern for next week. On November 21st, the December gold futures contract closed at 1201.50, with the market closing below the 9-day moving average still of about 1205 is confirmation that the trend's still a bit bearish. But if it closes above 1205, it would negate this bearish trend and basically to neutral. If we take a look at the weekly momentum indicator, the algorithm indicates that with the market closing above the VC price momentum indicator of 1194, it confirms that the price momentum is bullish, actually, as you can see the market closing here. The VC code for the week is at 1194, and so the close above it is bullish, and the target is telling you that basically look to sell at about 1215 to 1229 coming into next week. So the resistance basically that we're looking at is the 1215 to 1229 coming into next week, which is the area or the target zone that the code is recommending for you to take some profits on the swing trading signals, trading the December gold futures contract. So once again, the close above the VC price momentum indicator of 1294 is bullish, with a target of 1215 to 1229. If the market closes below 1194 during the week, it would project a correction back down into that 1180 as a target and the 1159 as your second target, basically. The 1180 is your first target, and the 1159 would be your second target, or the buy to level that the code is expecting to basically hold as a level of support, and recommends that when the market price trades into the zone, that it becomes the highest probability area for you to buy long. It does not recommend to short the market, even if it indicates that it could come down to 1159. The pattern of the program that basically we're following is the suggestion of the algorithm that it's indicating basically that this area should be an area to accumulate for the long term, as the path of least resistance, as you can see here, is breaking to the upside. And for all intents and purposes, this potentially indicates that there's a very high probability that this could accelerate into these levels projected as resistance for next week, and possibly come up to test the highs of 1255. Let's take a look at the Fibonacci fan lines and how they basically relate to this codes identifying for us where the highest probability of resistance for next week can be identified. And so we are going to take a look here in a minute at what basically the fan lines are indicating for us. Using the high that we made in gold back in 2013 to the recent low that we made here, approximate, we're getting an indication basically that the resistance levels that we're looking at in using the Fibonacci fan trend lines resistance levels seem to pretty much coincide very closely to the codes that we are identifying for next week to be resistance levels. And the first level of the Fibonacci fan resistance trend line gives us about 1236. The second level is about 1273, and the third level is about the 1309, 1310. So if we are developing into an acceleration pattern, these levels that I just mentioned should be levels that you want to take a look at as potential major resistance levels, that once they are broken, they become major support. But we want to see how the market, reacts in price once we get to these levels here to give us an indication of the next leg, or what the next leg of the market can be. Let's add to the equation the Fibonacci retracement from the highs of 2013, and let's see what we get. Once again, in using the highs that we made in 2013 to the recent lows, but let me take out the weekly and just confirm. We basically are using the high that we made in October of 2012. The Fibonacci fans basically analysis is using the 2013 highs of August 26. But in using the longer term projection on the Fibonacci retracements, using the high of about 1798 that was established on October of 2012 to the recent low, we are able to identify the first target, or 23.8% Fibonacci retracement, at about 1287, which I believe is possible that we can accomplish this over the near term. Particularly when you take a look at the RSI below on a weekly basis, indicating that we have some kind of a double bottom formation, and the market in price has closed above the weekly code of 1194. Once we challenge this next levels of resistance in the 1213 to 1226 levels, then the next target is the upper end of the range that is closer to the Fibonacci retracement of 1288. So I believe that we more than likely, because the path of least resistance right now seems to be to the upside, we can accomplish this target over the near term. So let's take a look once again at the daily chart and see what it looks like on the daily chart. And you can see a little more clearly here that these targets here seem to be very possible. But the first target, once again, that we're looking at in terms of the 23.8% Fibonacci retracement from the highs of 2012 to the recent low is about 1288 for December gold futures contract. Let's take a look at the silver market here for a minute and see basically what the algorithms that we published last week were telling us coming into this week for the December silver futures contract. On November 14th, the December futures contract closed at 1631. Basically, the market closing below the moving average of 1694 was still confirming that the trend momentum was slightly bearish. But closing above 1694 will negate this bearish short-term trend to neutral. The algorithm weekly momentum indicator, by the market closing above the 1598, last week's pivot point or metrics indicator, told us that the market was bullish and that we could approach targets of 1671 to 1711 into this past week. Let's see what happened here as we came into this week. The market basically made a high here into that 1645-46 area on Monday and came back down here by Wednesday to make a low of 1611. Pretty close to the metrics or the pivot point for the week of 1598, rejecting these prices and turning around to basically make a high on Friday of 1660, getting pretty close to the target zones of 1671 to 1711. So the algorithms that we published today for next week this report published today, for the November 21st closing prices, the December gold futures contract closed at 1201.50. And let's see what the codes seem to indicate for us as we come into next week. The December gold futures contract closed at 1201.50, but still closing below the moving average of 1205, which is pretty close. Still indicates a slightly bearish tone to the momentum, but a close above the 9-day of 1205 would negate the weekly bearish short-term trend to neutral. The algorithms for the weekly momentum indicator closing above 1194, it confirms that the price momentum is bullish now. But if it closes below 1194, it would negate the bullish signal to neutral, and prices can come down to that 1180, 1159 levels, at which point is recommending to go long on a weekly reversal stop and put your stop at 1159. If you go long either at these lower levels or anywhere near 1194, which is the weekly pivot point, the metrics for the week, look to take profits in the 1215 to 1229 area. And so in taking a look at the chart in silver, closing above the weekly VC code of 1630 now, let's take a look at the current report that we published in silver here today. Let me take a look here for a minute. I want to confirm that we have the correct algorithm in place. Okay, here we got to the weekly VC indicator is actually 1630, and I want to make sure that that we correct this right away, as I just realized that this is the algorithm for last week. The current algorithm for this week is the 1630 area, and so with the market closing above 1630, it's telling us that the next target is 1572 to 1703. And I just want to see if I can correct this here. The VC indicator for next week is the 1630 for the silver, with a target of 1672. And so if it comes down below the 1630 level, it's indicating for us basically that the buy one level can come down to 1599 to 1557, at which point is recommending to go long on a weekly reversal stop. And if you go long, use the 1557 on a weekly stop close only, and look to take profits at 1672 to 1703. The market closed at 1642.50, so it closed above the weekly indicator, but of 1630. But if it comes down and closes below 1630, then these lower levels here are projected as targets. If it stays long or basically comes back above 1630, if it does come down, then it's recommending and rejecting basically these lower prices, looking for the market to rally into 1672 to 1703, which I believe is the path of least resistance that we can accomplish into next week, just based on the momentum that we seem to be building here, as we made the low of 1504 on the week of basically 11/7 of 2014, just a couple of weeks ago. In taking a look at the RSI, it's confirming that we have basically the momentum bullish as well. We got a major, what looks to be a head and shoulder bottom in the making here on the RSI. So there's just a lot of confirmation that we're getting from a technical point of view, in addition to the codes identifying for us, as you can see here, the buying level of about 1593 to 16 seems to be an area of major support. And this is where you want to enter and initiate your positions if given the opportunity to do so. Look for the market to continue to move higher as we potentially closing above the 1703 can target the 1777 to 18 levels above, all the way into basically 1862. Let's add the Fibonacci retracements from the highs that we made here in the silver market at about 37, and get an idea of what we can expect. with regards to the Fibonacci fan trend lines. Let me open up the chart here a little bit so we can do a little bit of comparison. But the Fibonacci fan lines here that we are using go back to basically the highs that were made in 2013, and in using the low, the recent low that we made, we're getting an indication basically that the first level of resistance using the fan lines comes into about 1862. The second one is at about 1997, and the third level is at about 2099-21 level for the December futures contract. The resistance above connecting the highs now that we made indicate prices can rally all the way up to about the 23 level. But let's just verify here that what we're using in terms of projecting the fan lines is we're using the October high that was made in 2013, and in using the bigger Fibonacci fan lines, we're using the high that we made back in 2012 of 3758. And you can see on this chart here a little more clearly, more or less, where that resistance levels come in. And this is the weekly chart. And so for a minute, since we're doing the weekly chart, let me add the Fibonacci retracements from the high that we made in basically 2013 of about, we're looking at about 25 in that vicinity to the recent low. And we get a very good picture here where the short-term resistance can be identified. And the 23.6% retracement is looking at about 1745 as the near-term target for silver. And it's pretty close to what the algorithm seems to be indicating for us coming into next week. So if we were to close above that 1703, then you're looking at a target zone of about 1750 to about 1780 into that vicinity over the near term. If we close above there, then the target is the next level of 38% retracement that matches the Fibonacci fan trendline resistance of about 1897. And we can get up to as high as a 50% to a 61% Fibonacci retracement, which points to about 2144 to 2175 for the December futures contract. So there seems to be a lot of room on the upside that we are able to identify here by using this particular trading tools here that we are using right now. And once again, it's telling us here that the market closing on Friday at 1642.50 is bullish, and it puts into the picture the target of about 1672 to 1703 for the December silver. On the low side of it, the support comes in at about 1593 to 1558, which is recommended highly that if you get a chance to add to your positions, these are the levels to accumulate long term. So I hope that we've been able to at least identify the silver market and the gold market right now. And I want to move into an ETF, a particular instrument that we've been trading quite successfully here over the past few weeks. And I've been recommending my subscribers to take a look. For all futures traders that are comfortable trading an aggressive instrument with aggressive volatility, after quite some time, many years of trading in the futures markets, I am basically finding that this instrument offers some really great aspects of an instrument to be used in trading that you don't get in trading in the futures contract. And one of the things that we are doing is basically managing the risk, not necessarily limiting the volatility, but managing the risk. And that's what basically this whole thing is about, is being able to manage your risk very successfully, and basically the application based on using prudent money management techniques will allow you to stay and trade intelligently in your position without being forced to liquidate, or without being subject to a lot of the unprecedented regulations that take place in the paper market. What I want to do is take a look at this instrument and see once again what we were saying last week when we published the algorithms for this report. And if you want to take a look at it, you can see it basically on the podcasts as well. So let's see if we take a look at the report coming into last week. The market closed in Jnug at about 426, and it was still a bit bearish, but the close above 426 was indicating that the short-term bearish trend will neutralize, or will go to neutral. And the market pivot point or metrics for the week was 401, and it confirmed that by the market closing above 401, it was bullish. But if it closed below 401, it would basically negate the bullish signal to neutral. So your stop or your pivot point, your metrics was 401 coming into last week, and it told you that because the market closing at 426, it was targeting 482 to 537 as your target point. So let's take a look and see on the 14th. Basically on Tuesday, the market made a high of 609 on Tuesday, where we actually took some serious profits. We kept the upper end of the target in place, and it went beyond our expectations, and we liquidated our position with an incredible profit for Jnug for the week. And although we are maintaining an open position, and we do have an open position, we with a profit opened, we have reduced quite a bit and taken some of the profits that we used to trade this indicator. But let me just give you a quick idea of what can be done. We started trading this $125,000 account sometime last week, and as of the close on Friday, we are up to 186,000. It's been as high as 204,000 basically during the highs of the trading open session during the week. But we ended the week with a profit of $61,790.50. And so for the aggressive trader that wants to build speculative wealth aggressively, like we're doing here in this account, we are using the ETF Jnug, which is the Junior Gold Miners inverse ETF, 3 times the volatility. And if we take a look now, let's see basically what we can expect as we come in next week for Jnug. On this report that we just published here recently, let me add the trend lines, the codes for next week, and see what they are saying to us. But on the close of Friday 21st, the contract closed at 540 for Jnug. The market closing below the 9-day moving average still of 766 is confirmation that the trend momentum is a little bit bearish here, but a close above the 9-day moving average would negate this bearish short-term trend to neutral. With the market closing below the 563 area, which is the metrics or the pivot point for the week, it's indicating that the momentum is a little bit bearish. But a close above 563 would negate this bearish signal to neutral. If the market comes down into the level of 517 to 494, it's recommending to buy long and add to your positions at this point. The buy one level is 517, the buy two level is 494. And this is the area that offers the highest probability to buy longs or to reinstate your long position. And you can use the 563 if you go long at these levels as your first target, or you can use a close above 563 to confirm the uptrend, projecting once again the market should be able to test that 586 to 632 levels come next week. We have some gaps right above the market here at 646. There's another gap above the market at about 1011. And so it looks like the charts are indicating to us that there is some kind of a bottom being made here. Let's add the Fibonacci fans and using the same periods that we were using before here, and see what is telling us as far as the first level of Fibonacci trendline resistance. It's pointing up to about 1599 to 16 for Jnug. If we add the Fibonacci retracement, we are getting a pretty clear picture that once we close above this level of 632 to 650, that we can run up rather quickly all the way up to our first target, which is the 23.8% Fibonacci retracement of 1249. And in using these measurements, we basically are going back to the high that we made in 2014, in March of 2014 of 43, and the Fibonacci retracements as well as the FEN and the Fibonacci retracement from the same period. And you can see here that we are building a what I believe is a bullish base, and the codes have been able for us to identify basically what the weekly charts are indicating is we have some kind of a major bottom in the making. So once again, just to review the daily chart for Jnug, the close basically below the 563 is slightly bearish, recommending that if we come down to 517 to 494 to buy the market, and look to take profits at 563 if you buy it at these levels, with an upper end at an upper end objective of 593 to 632 for next week. I hope that I have given you some clarity in regards to the gold and the silver markets, as well as the Jnug, which is the instrument that we're using aggressively to build aggressive speculative wealth that should only be used by traders that understand volatility, understand the fact that this is an aggressive ETF, and that you should be able to deal with the risk that it is part of trading this kind of an aggressive instrument. Once again, it's been a pleasure to talk to you here. I look forward to seeing what the market brings us next week. And in the meantime, if I don't speak to you, have a wonderful, wonderful holiday weekend and a wonderful Thanksgiving for you and your family. This is Patrick MontesDeOca. Take care.